Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Seedfact.tv, bringing you another review yet again. Yes, we'll bring you as many reviews as we can on decent projects, and then it's up to you to do your own research to see if you want to make a move and jump into any of those projects. As far as we are concerned here on Seedfact.tv, we do not necessarily hold all the projects we present to you week in, week out, but some of them we do, a good number of them, but not all of them. Sometimes we just need to bring you these projects, throw them out there, shine some light on what they are trying to achieve. Anyway, so the project today, guys, is tax. And if you are one of those who hold the opinion that at some point in the future, the financial system will be built around the Bitcoin standard, then one of the projects you should actually be seriously considering, is tax, a Bitcoin layer for smart contracts, which enables smart contracts and decentralized application to trustlessly use Bitcoin as an asset and settle transactions on the Bitcoin blockchain. Some call it Bitcoin's own layer 2, but for smart contracts, since it still settles transactions on the Bitcoin network. Launched in 2021, Stacks has been earmarked to introduce the Nakamoto release during this year, which is 2023, and this upgrade is rumored to bring important capabilities that will enhance the power of Stacks as a Bitcoin layer. So we are looking at a decentralized two-way Bitcoin peg to move BTC in and out of the layer and right to Bitcoin. Transactions will be secured by Bitcoin finality and faster transactions between Bitcoin blocks. If you want to know what that represents, please keep watching. So guys, if you are new, please consider subscribing to this channel. We want to tell the YouTube algorithm that the content coming out of this channel needs to be shared with a wider audience, and we also have our ambitions to grow the channel, so your help will be much appreciated. Anyway, let's look at some of the key features out of Stacks, or coming from Stacks. It is secured by the entire hash power of Bitcoin, which is also known as Bitcoin finality. We also have trust minimized Bitcoin peg mechanism, as well as writing to the Bitcoin blockchain. We have atomic BT swaps and assets owned by BTC addresses. Stacks uses the Clarity language for safe, decidable smart contracts. Stacks maintains knowledge of full Bitcoin states and can read directly from Bitcoin. So it can write as well as read directly from the Bitcoin network. Stacks is scalable and offers faster transactions that settle on the Bitcoin blockchain. And the value propositions include Stacks as a Bitcoin layer, which extends the finality and performance of the Bitcoin blockchain without requiring any changes to it. To preserve its valuable properties, the Bitcoin blockchain is by design slow, minimal, and resistant to change, which means sophisticated applications cannot build directly on it, but Stacks changes that. The Stacks layer makes Bitcoin a fully programmable asset in a trustless manner. Stacks is also claimed to make hundreds of billions of dollars of passive Bitcoin capital productive, unlock it for decentralized applications, and make Bitcoin the backbone of a more secure Web3. The Stack layer extends the functionality and improve the performance of Bitcoin without changing the Bitcoin layer 1. So you can see the narrative, the story around Stacks is focusing on maintaining Bitcoin's security credentials, its decentralized credentials, but interacting with the wider ecosystem that we refer to as Web3. So as part of our evaluation, guys, as you know, we apply 13 elements, and those 13 elements include decentralization, security, interoperability, scaling, the project tokenomics, social media presence via Twitter and via Discord, the project team, the edge of the project, as well as the project's use cases. So starting with decentralization, Stacks has knowledge of the full Bitcoin state. It can trustlessly read Bitcoin transactions and state changes and execute smart contracts triggered by Bitcoin transaction. Like proof of work, Stacks' proof of transfer or POX is permissionless. Anyone can be a Stacks miner as long as they are willing to spend BTC. That will be a big ask. Also, any STX holder, STX being the ticker symbol for Stacks, can lock their STX called staking to participate in proof of transfer consensus. The Bitcoin read functionality helps to keep the decentralized peg state consistent with BTC logged on Bitcoin layer 1. Stacks' trusted minimized Bitcoin peg introduces a novel decentralized non-custodial Bitcoin pegged asset as BTC, so smart contracts can run much faster and more cheaply using Bitcoin pegged asset without compromising safety. As far as security is concerned, Stacks is secured by a novel consensus mechanism called proof of transfer or POX. Stacks reuses work already done by Bitcoin miners and does not consume any significant amount of additional electricity. This can also be a good value proposition for those who are stuck within the ESG narrative. Stacks is secured by Bitcoin. It enables Bitcoin finalization for Stacks transactions. After about 100 Bitcoin blocks or approximately a day of confirmations, the transactions that happened on Stacks stacks layer will be secured by the entire hash power of Bitcoin, meaning that to reverse these transactions, an attacker will need to reorganize Bitcoin, which is not economically viable. Such transactions settle on Bitcoin and have Bitcoin finality. Further, the stacks layer forks with Bitcoin, so any state on stacks automatically follows the Bitcoin forks. Stacks supports Clarity, a safe, indecidable language for provable smart contracts. With Clarity, developers can know with mathematical certainty what a contract can do and cannot do, even before executing. Now, I think that is also a very interesting and attractive value proposition. You know what the smart contract result is before you even execute the contract, which means you could actually get to a point where you know the transaction fee before you execute the smart contract. That will be an interesting one to watch. I want to see how far they take that one. Anyway, moving on to scaling. Stacks provides high performance and scalability through several mechanisms, including faster stacks layer blocks between blockchain blocks. Further, scalability layers like subnets can make different trade-offs between performance and decentralization than the main stacks layer. Subnets can support other programming languages and execution environments, for example, Ethereum Solidity and EVM, which allows all Ethereum smart contracts to use Bitcoin pegged assets and settle on the Bitcoin chain. Again, that is a very good value proposition. It also bridges to interoperability because you're now linking Ethereum Solidity language and EVM to the blockchain network. That is great. I know other projects are doing that, so this is by no means revolutionary, but it's just great to know that this Bitcoin layer is actually going that far. And finally, with its upcoming updates, Stacks is aiming to improve transaction times to 5 seconds per transaction on its layer 2. Now, on to interoperability, which is the ability of a project to work across its own boundaries. Subnets can support other programming languages and execution environments, for example, Ethereum Solidity language and EVM, which allows Ethereum smart contracts to be used with the Bitcoin pegged asset and settle on the Bitcoin chain. Stacks already has atomic BTC swaps and enables Bitcoin addresses to own and move assets defined on the Stacks layer. Again, another powerful one. You don't need a specific Bitcoin address. You can use the stack address, which is great. Magic swaps are also another example of trustless atomic swaps between BTC on Bitcoin layer 1 and assets on the Stacks layer that are already live. Furthermore, users can own Stacks layer assets like STX, stablecoins, and NFTs on Bitcoin addresses and transfer them using Bitcoin layer 1 transactions if they prefer. So you can choose to use the Stacks network or the Bitcoin network, which is good. It's offering choice. As far as the project team is concerned, according to LinkedIn, there are approximately 50 associated members. Now, some of those members could just be external partners, so take some of this data with a pinch of salt. Let's move on to some use cases for Stacks. Ticker symbol STX, and it is the fuel of the Stacks network. The Stacks layer's native token STX is essential to proof of transfer consensus. The STX token is used for incentivizing Stacks miners to maintain the Stacks layer global ledger outside of the Bitcoin layer 1 and for providing liveness guarantees to the SBTC peg and incentives for threshold signers that participate in the peg mechanism. Holders of the STX token can stake their tokens to help secure the network and earn Bitcoin in rewards. The Stacks layer introduces Bitcoin to DeFi. We already knew that. It unlocks the deployment of hundreds of billions of dollars of latent Bitcoin capital into applications like decentralized Bitcoin-backed lending, Bitcoin-backed stablecoins, and much more. Stacks could also contribute to the security of the Bitcoin network through increased transaction volumes, which in turn result in higher transaction fees, thereby making it extremely expensive to exploit the Bitcoin network. An indirect link, but is still a viable argument to make. Social media presence for Stacks, it boasts over 156,300 Twitter followers and just over 41,000 Discord members. On to some tokenomics now for Stacks. Ticker symbol STX, total token supply 1.818 billion, circulating supply 78%, initial token sales accounted for up to third of the total supply. Token distribution, the team was allocated 14.5%. There was also allocation to blockchain.com 2.4%, token sales between 2017 and 2019 38.1%, equity investors 8%, Euro PCB Treasury, I have no idea who that is, 14.2%, Stacks Foundation 7.4%, independent entities 4.1%, Liberated Software LLC, I suppose that's a company tasked with the development of the software, 6.6%, research universities to further the research on Bitcoin network and its ecosystem, 3.8%. So insider token allocation, according to our own calculations, comes up to 62%, which is way above our top end threshold of 30%. So at 62%, that figure is going to be reflected when it comes to scoring on stacks. So without further ado, let's give you a quick rundown of those 13 elements before we jump into the scoring part of this exercise. So the 13 elements are decentralization, security, scaling, interoperability, the project team, social media presence, its Twitter and Discord, age of the project use cases, tokens issued at project launch, total tokens in circulation at the time of recording, maximum tokens available, as well as insider token allocation. So starting with decentralization, we gave stacks 5 points out of 10, on security 7.5 points out of 10, on scaling 5 points out of 10, on interoperability 7.5 points out of 10, the project team 10 points out of 10, social media presence via Twitter 7.5 points out of 10, via Discord 7.5 points out of 10, age of the project 5 points out of 10, project use cases 7.5 points out of 10, total tokens in circulation at the time of recording 5 points out of 10, total tokens in circulation at the time of recording 7.5 points out of 10, maximum tokens available 5 points out of 10. Inside the token allocation, like we have already highlighted, is very high. We are going to give stacks 0 points out of 10. So do you guys agree with the scores we've allocated to stacks? Let us know in the comment section. The aggregate score for stacks comes up to 80 points out of 130, which is a decent score. Most projects we've reviewed on this channel are categorized within that group or that ranking. So stacks is in good company. As far as stacks is concerned, I currently do not hold the stack tokens, the STX tokens, but it's something I'm actually considering maybe to throw a small bag into stacks. What about you? Do you hold stacks to get additional exposure to Bitcoin if you don't already hold Bitcoin? Let us know in the comment section. And with the value proposition on the table here from stacks, I think as and when Bitcoin stretches across the financial ecosystem, I think stacks will do quite well. But again, that is just my own opinion, guys. This is not financial advice. Please do your own research and let us know what you think as far as stacks is concerned. Until the next video, I'm your host, FD for Certified.tv, signing out for now. Bye.